go ahead and get started. I just want to double check my YouTube and make sure it's actually working. Always better to check it in the beginning than after the end of the day. Let's see what we got. Just want to make sure we're going live. All right, good. We're live. So, good morning to everybody. Thursday morning. And, yesterday they raised interest rates again. If you guys weren't watching. For those of you guys who don't have a news page, this is the one that we traditionally use right here. I'll put a little link in there. And what it does, it gives you the ability to go in and look at the calendar and just say, look, it's Thursday. What type of news are they going to have today? So they've got GDP. The big one for us, 8:30, traditionally unemployment claims usually can make the market go crazy. The market's in a one-way uptrend today, really since yesterday. And I don't think that any of the news that they reported today changed anything. Durable good orders are up. Unemployment claims are down. GDP is a little higher than expected. So pretty much all good news. The only other news that we have, unless you're a natural gas trader, natural gas news comes out at 10:30. But unless you're trading natural gas, which most of you are not really a big deal. 10 o'clock pending home sales. This is the only one that we're going to have to watch at 10 o'clock that if some kind of surprise number comes out, which I doubt, could affect the market. But you really need to pay attention to these times, 8:30, 10 o'clock. Earlier in the week, it's 9 o'clock, 9:45. And if you watch those times, just make sure you're not in a position at those times traditionally, because the market can get really crazy and we don't want to be involved in we're already involved in enough crazy stuff, right? So we don't really need any more crazy in our lives. And the only reason we stay out of the way of news is because it makes your risk uncontrollable. When everything that we do is about precision and trying to find the right setup at the right spot and risk a teeny tiny little bit. For those of you guys who haven't seen, I'm just going to show you a bigger chart on the NASDAQ just to give you a little, where second divergence or the last word is lower in time. You got yesterday. There's always, for some reason, obviously, some people, Discord is really tricky as far as it goes in and takes over your audio video. Sometimes it changes things. So again, I made this picture yesterday, but you guys, I'll put it up here just in case. So go to your audio video and make sure that your input and or output devices are actually correct. So this is a good one to just kind of have in it. Anyway, hopefully that was up long enough for anybody who is missing. So anyway, what we're talking about is this second lower divergence. And, and again, when we talk about the NASDAQ, it's a little bit of a different beast, but it's really not. It's just a little more volatile, which is great because it gives you more opportunities. So look, this first divergence is nice because when we look at it from a fib, we say how many triggers got past the fib, and you say none. And then it almost always comes back to the mid-band and starts the same pattern over, and it retests the area. And during the retest, it's this second divergence that counts. Now, can you do a trade after a second divergence? And that's really the question. So let's look at it. Let let me try this. That's not right. F7. So look, after this divergence is true, let me plot this on all charts. Everybody understand what this line is? This line is after the second divergence is true. Because then you have to go to your smaller charts and you have to say to yourself, how the hell am I going to get paid for knowing that the top is in? Everybody with me on this? How am I going to get paid? And I gave you guys there's basically 3 trades that we do, and there's really no change. The first trade that you can do, which all of you have been taught and all of you have been, and look, I'm not changing my thought process. The trend trade is still kind of the mother's milk, so to speak. And the reason why we start you with trend trades is because, number one, when you do a trend trade, every trigger on the planet is going your way. I mean, everything on every chart is going your way. And that's really the highest probability that you can get, for at least a trend trade. Having everything going your way, having all the triggers, buying at the right spot. And once you understand this trade, and more specifically, once you read strong is everybody, just by hands, yes or no, is everybody comfortable with strong trigger lines? I guess I have to start with that just to make sure that everybody's on the same page. Is everybody comfortable that when you look at your trigger line, you can go, wow, that's strong? Yes? Okay. For anybody who's new, if you have not done so yet, you really need to go to this trigger line section. And you really, 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 really have to spend time with the trigger lines. Watch this trigger line video if you haven't watched it. That's in here. And I think you'll have a really comfortable, really good understanding of what you're looking for with trigger lines. And it's real simple. There's literally, I hate to say it's simple, but it's really freaking simple. If you don't get this, you don't belong in trading, period. If you say, man, these triggers are too damn confusing for me, it's a warning sign that this may not be for you. So I'm just going to say it. I know it's not politically correct, but I don't have to be. If both triggers are going up really, 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 really strong, you have a really good chance the market's going up. If both triggers are going down really, really strong. Now, what chart is the most important chart? I'm going to give you guys a trick question. No. The chart that you're going to trade on is going through this Fibonacci tops and bottoms and areas that may reverse the market. We call them termination conditions, but when I sit here and I think about it, it's not really a condition, it's just a freaking area. I mean, it is an area, and the condition that we have to check for is the trigger strength and location. So if the triggers are really, really, really strong and we get to an area, it's not really going to terminate the trend. It's going to stop you from taking any more trades until it breaks. Does that make sense? It's not really going to terminate the trend, so that's kind of a misnomer on verbiage. It's just an area where you're going to pause and say, hey, let's see what happens here. So when we look at our chart, right, the red fib is an area where you're going to say, hey, I got to stop thinking long trades. And if I hit big blue areas, I got to say, hey, if I'm going short. Now, when we talk about conditions, right, so this right here is a condition, a termination condition. And when I say second lower divergence, do you guys know what I mean? It means that this divergence high, it's basically a lower high. So there's not really a lot of trade room in there. After this condition, the second time, now our expectation changes and we say, okay, with this condition, we're probably going to go down to here. So now we have to say to ourselves, how the hell do I get paid for this knowledge, right? I know all this smart stuff and I can see it. And not only that, I have about a 90% chance plus of getting to the farther away area because I've spent hours and weeks and months studying this pattern and I know what's going to happen next. This is the part where new users don't have a library of reference, right? They just see what's happening on the chart and it doesn't have meaning. And this is why, as a new user, you can't get frustrated because you don't understand what the charts are telling you yet. It takes time to learn these patterns, and it takes time to build that anticipation of what's going to happen next. And if you anticipate correctly what's going to happen next most of the time, you're going to feel a hell of a lot more comfortable executing your trades. Does that make sense? So the first rule is for trend trade and says if we have a good top or bottom and then the triggers are really strong, then we're going to buy or sell a pullback, right? That's a trend trade. With the NASDAQ, half of your trades are going to end up being momentum trades because that's just the way the NASDAQ is. It's geared to have a lot of momentum and a lot of volatility. And if you can find some momentum trades, you know, I posted in one yesterday. You guys were gone. I don't know if you guys checked back in the room, but I posted in some trades in here yesterday. Let me show you. So look, this was one where we had and again, I didn't label it a whole lot here, but I want you to see it. We had a condition at the top, which is 1-to-1s and small triggers are really weak. So here, watch. I'll do a better job of annotating for you guys so you can. All right, so watch. You're going to see, we're going to talk about this theme that's going to end the trend that we can say pretty, fairly conservatively that we're going to have the opportunity for the market to go down a little bit. So everybody okay with this? Small triggers were below the 1-to-1. That's our condition. That's all we need. Just tells us, hey, it's a spot where it might stop. Then on our smaller chart, we have the same thing. We have a termination condition, pivot stop out. And then your entry, when you do momentum trades, essentially your triggers are going to look like this. And remember when I said everybody has to know what a strong trigger line look is? So whenever you have these strong triggers, and look, what's a trend trade? You're trying to buy a pullback to a mid-band and fib, yes? Or sell a pullback to a mid-band and fib. That's all you're trying to do. So it's the same thing without all the bullshit waiting around for 2 hours for a retracement with everything to get strong. It said right now, right here, you got your mid-band and fib and the triggers are strong. What are you waiting for? Does that make sense? You don't have to, you don't have to have it go all the way down and then wait for it to pull back up if you have a very good understanding of what a top is going to be and what the expectation is. Now, sometimes on the NASDAQ, you get a momentum trade after a top and you never get a trend trade, right? And again, let's play devil's advocate here because if, you're only learning trend trades, then you're looking at this picture, right? And you're saying, okay, yay, a top. And then you're saying, yay, strong triggers going down. And then you're saying, okay, now I need a pullback into this area, which would be a trend trade if it ever happened, right? So this would be a trend trade area, and that's totally fine. You could do it if it happens. Right? So this would be a perfect trend trade spot if they pulled back, which would give you two choices, right? You can either hold on to your momentum trade and add on to your position if you do get a trend trade, or you can exit with a loss of momentum and then get in on a trend trade. So you have options. And when I go look at the market, this morning, and I'm building up, kind of a long-winded way of showing you what happened this morning. When you say, do I prefer to be past the mid-band? Traditionally, what you're looking for is, and that's a really good question. On rare occasions, not. But what you're looking for, remember when we talk about areas, we talk about location of the trigger lines range. Traditionally, you want triggers and your area to come together. I mean, that's kind of the exact same rules for a trend trade, is it not? Your triggers and your areas come together. So that's really the only prerequisite. I mean, obviously you have to have strong triggers. But the idea is that you have this confluence of mid-bands, fibs, and triggers that come together. But it has to only be after you can say, all of my charts said we're going to have a top, or else you can't do a momentum trade. You're going to get your ass kicked. Does that make sense? So, and again, I think I posted in another one yesterday, if I'm not mistaken, at the end of the day. Let me go back to my pictures at the end of the day here. No, I don't think I had another one in there. But anyway, there's a million of them out there. But let's look at this morning's and so this is a long-winded way for me to get to what happened this morning. And again, it depends on the area, but you traditionally don't have to risk a whole lot of trades on momentum trades, Jose, if you're getting in at the area. If you get in a little farther away from the area, obviously you have to risk a little bit more, but anyway, this is a very long-winded way of me getting to this morning and you guys seeing, number one, the condition, right? So condition first, and then that's why I drew the line on here so we could go back and find wherever there was a trade. So as we go forward, so is everybody okay with this? We have the condition at the top that says, yeah, maybe we got a top. And because of this second lower divergence, we say, hey, we're going to go further to this fib. So now we have to go dissect our smaller chart and say what happened, right? So again, this is one teeny tiny piece in the puzzle. But I want you guys to look at this chart and you guys tell me, where do you see the momentum trade that makes sense? Now, for me personally, I don't see it right here because we have a lot of fibs. Remember, this line was after the divergence became true on the larger chart. Just I want you guys to know what that line was. Let's see if that. So that's the time that divergence became true. Now, I think when you're watching your small chart, we have a fib and a 1-to-1, so we're not going short there. my eyes are trained to this spot right here where we have 1-to-1s, red fibs, and the small triggers going down strong right there. I think that is your momentum trade short with the anticipation that we're going to make it down to the blue fib. Can everybody see it? So it's a and again, I don't want to understate in any way whatsoever that you must have this true. No, Jose. When you say that, that's very, this is all being recorded. So if you want to go back and watch it later and rehash it, that's fine. I've got more of it recorded. But you have to have this true first with areas and conditions, and then you can do a momentum trade. And then this is your momentum trade, and it's short-lived. It only goes from 26 down to the 09 area, and then that's it. But still 17 points, 16, 15, so that's all you need. Now we're going to start it in reverse. We're going to have a area and condition. So the area for us is the blue fib. And the condition is strong triggers up. Now, you remember we had a big picture perspective this morning. We already established it. That we were going to hit this fib on the big chart and that we were probably going to go all the way up to the red fib. How the hell did I know that? Well, I didn't know it for sure, but in a strong trending market, it's a pretty damn good bet. So you're saying to yourself, what if I just bought 15,810 and held on all the way for 15,867? Did that thought ever go through your head? Of course it does. That's what you're doing. You're doing it on a smaller chart so you can have less risk. But you're doing the same thing. You're saying this fib area should hold because triggers. I'm getting in, and there's 3 speeds that you can do it. You can step way back and look at a big chart and do big trades and a lot less of them. Or you can do the small chart version and do momentum trades or trend trades and try to risk a lot less, but you're probably also going to make a lot less. It's the same trade on every chart, no matter what. You're always looking at fibs and triggers and anticipating what's going to happen next. And again, we were going up. Obviously, we've got an extended trend to the upside, which we've already discussed. So breaking a fib and retesting it is a very, very common way that you're going to see the market behave, and it almost always gets to the next fib. That's why I drew the box there. It's not magic. It's just that's where the next fib was. Now, when we get to a fib, we have to ask ourselves a question, right? What's the condition of my trigger lines at this fib? They're pretty strong, right? So there's no hope of this being a top yet. Not saying it can't be a top. It can do whatever the hell it wants. But for now, the anticipation is we may still go higher. Will we? I don't know. Spot to watch. All right, so anyway, once you have an area and a condition, then you can start doing trades. And again, when you look at the smaller the chart you look at, you're going to deal with retracements. And again, hopefully you see the same thing that I see, that because the larger charts were up, we're not really looking for short trades. You're looking for, let's look at it this way. There was no real condition. There was a termination spot, but there was no trigger line condition that said, hey, we're going down. So we're basically looking for longs or nothing. We've already kind of established that. So as we hold the area and the condition changes again of our trigger lines, you might get another trend trade. So you're going to end up with a couple of different trend trades along the way. And again, look, shorts are short-lived, but we still had the ability with the right condition to get one short trade. How many divergences on the highs have you seen since the low? So I see a divergence on the low, but I don't see any divergences on the high. And that's usually a really good sign that the market's going to keep going. So these divergences add to the condition that says, hey, we're going down. And more importantly, the second lower divergence gives you the ability to start doing your first trade short, even though it's short-lived. So look, you can go back and study any chart you want, and I really beg and implore you guys to go back and study. Watch, I'm going to take this 55-8 chart and I'm just going to go back in time. So this is a random go back in time. And I just want you to see, this is to the beginning of it, but when you get divergences that are lower than the prior divergence, you can start to expect the market to make a bigger move. And then when you get, look, before this chart goes forward, and it doesn't have to happen, but now we've got a divergence that's higher. So look, everybody okay with this pattern? Divergence and then a lower divergence. Usually they're closer to each other, but divergence, lower divergence, strong triggers going down, you can expect the market to go a little further. Divergence, higher divergence, not really strong triggers up, nice, but there we go. So once the triggers roll back up, you can see the expectation on going a lot further. And not only do we have a higher divergence, but we had another higher divergence. You don't really need much more than this, do you? If you just waited for some type of really good condition, a second, fibs or second higher lower divergence, plus strong triggers. Look at that. Could you make a few dollars on that? I think you could. And look, let's just find out when the next lower divergence was. All right, so here's the first lower divergence. Is everybody okay with this? So just quick study time. No big deal. So we had 3 across the top, which is nice, but this is the first lower divergence, and well, we ran into a fib, so that kind of ended it. But anyway, if you saw this in real time, you probably had a short trade in here to get to the fib. This is the 55-8 chart, so it's a very big chart. Again, you'll see this pattern happen all the time, and when you don't get a lower divergence, you end up, again, it's just one pattern out of a lot. But just go back and study your charts, and you'll see it doesn't happen a lot. Sometimes you get the old faithful, which is what? Pivot stop out at fibs and then strong triggers, and that's still an okay pattern too. I'm not saying it's only one pattern. That's just a pattern. Fair enough? All right, let's get rid of this. So the anticipation is because of divergence, we go down. We did. Now we have divergence and a higher pivot with divergence. And the anticipation is we're going up until further freaking notice. So was there any trades to be had along the way? Again, the smaller especially at 930, the Nasdaq's a little bit tough, but had you bought support with all of your triggers somewhere in here, you could have made a little bit of money. As resistances break and become support, you can buy again, make a little money. Basically repeat process until the cows come home. So right now we've got support. And let's just say hypothetically it does what it's supposed to do. Where are we going? we're going to resistance unless something changes. Right? We're not really looking for short trades on a day like today. Usually the first 15 minutes, they whip the shit out of everybody. If you haven't figured it out by now in the NASDAQ, but they do what they're supposed to do. You have to really think support area, we're going up to resistance unless something changes. And you'll see this a lot from the NASDAQ, especially early in the morning. If you were long already, which was the right trade to do, I'm going to put a circle on. So let's just say hypothetically here or here, you decided to get long. It's the right trade to do. It's the correct trade. They basically said, let's reach our hand in your pocket and stop you out and then go again. Right? And they do this from time to time because that's what the market does. They stop out the low, and then, this is where I think personally you have to have a contingency plan for the NASDAQ. If I know it's going up for the most part, and they do stop me out, I'll go long again a second time. Give me an up bar or a close above the triggers, and I'll go long a second time with the anticipation from my larger chart that we're going to probably make it to the fibs or somewhere close. Does that make sense? So just because you get run out of one doesn't mean you can't do it a second time. You just have to have some type of contingency plan on how you're going to do it. All right, P, let me look at what you got. This is crude oil, so awesome. I mean, you can't do much better with, the exception of maybe chilling out a little bit and relaxing and letting it get there on all of them. But, I see what you're doing, taking some and then. All right, let's talk stop logic for a second. This is awesome freaking trading. You made a ton of money. There is no doubt. Textbook, super simple. Your trade? We're just now doing it. I said it's freaking awesome. How's that? Let's start with that. All right, guys, let's do condition and areas, okay? Everybody okay with this, that we had a lower pivot with divergence, and then the triggers were all rolling down. Condition that says we're probably going lower. Everybody give me a Y or an N, yes or a no, you understand it. Okay, so we start with a condition of not just what are the triggers doing, but how the hell did we get into the situation that we're in, which is going down. So we have a condition. We have a pivot, a divergence pivot that's lower than the high, below resistance. This is the literal definition of a good top in our videos. This is also where you should probably be trying to go short a hell of a lot faster somewhere over here if you get it on your smaller chart, which we'd have to go back and look. But anyway, that would be the first opportunity, in my opinion, that any type of momentum / something would be a good idea. Are we cool with that now after going through that little lesson this morning on why I would be okay with that? Anyway, now, P chose trend trades, which is awesome. All of his rules were met. If you don't know the rules for a trend trade, they're really simple. All of your triggers are going down strong, which is rule number 1. If you don't know what super strong down triggers are, just watch the video. You will. Hopefully you see it. It's visually easy. And then the idea behind what we do is we want to sell pullbacks, which he did awesome here and he did awesome here. Now, the only thing that I personally would probably change a little bit on this, if it was me, is I would probably put my stop behind the 1-to-1 and say, I dare you to come get me. Yeah, but it doesn't really matter even if divergence did print. Because once you actually take the entire context and put it all together, the chances of them taking your money are going to be very slim. So, but you have to go way back in history and say, because I had a good top from divergence, from fibs with divergence and strong triggers, and everything remained strong, this is where, and you had the anticipation because you left your second target to get there. This is where you have the anticipation is we're going to make it to this fib, right? You already had that anticipation because your target's there. So, you know, again, if you spent, I don't like the idea of putting a stop right behind a pivot if it's at the best place on the planet to go short. Now you got back in again, which is freaking awesome, which is, you know. But in my opinion, I think, you know, again, look, when I look at it like this, if you weren't in a short trade, isn't that the spot you'd want to go short? Fibs, mid bands, triggers. I mean, it's literally the place to go short. So, and again, I know you have rules or whatever, but this is one of those situations that because of this, right, I would rather lose money than get stopped out right there. That's the attitude. It's like, screw you, try and take my money. I'm going to put it just a little farther out of the way and make you earn it. If you're going to get it, you got to at least earn it. And you just kind of put some bait out there, which we all do it. It's okay. I have one the other day. Look, I was up $3,000 on, I'm going to show this to you and you're going to just laugh. And you're going to go, what the freaking frack was I thinking? Look at this. I was up over my limit on the day and I got puckered. I got a little bit tight. And I took 2 points on an S&P trade and put my stop really tight. Look, I want to show you, P, that I am not immune. I did it. Look how stupid this looks. I went long and took a couple points and pulled my stop up because of a small chart so I wouldn't lose. And look how stupid it is. I mean, I did it. I call it stupid because I did it personally. And I wasn't willing to lose because I was over my limit of the day and it was at the end of the day. And I don't normally trade S&Ps, but I saw it. And I wasn't fully, you know, I wasn't willing to lose anymore. And it made me, because mentally, this is a mental thing. It's not an execution thing. Mentally, I said, I'm not going to lose any more money today. Period. I'm done. I'm over my goal. I shouldn't even have taken this trade, but I did it anyway. And that one little mental thought of I'm not going to lose money made me put my stop at break even, and that's what I got. You took the same one? Yeah. And I bet you did a hell of a lot better than I did. But I was on the phone with my programmer and I was showing him some things and I said, look, a trade, and I did it. But anyway, I wasn't committed to it. And it looks silly because easily could have made 12 S&P points on that. So I just want you to know, I threw a little stone at you, but I can be guilty of the same thing. So, you know, look, the right thing to do is put your stop over here and go, screw you guys. I dare you to come get me. And yeah, most of the time they won't. Sometimes they will, but it's okay. So I just want you to see I'm not immune to doing something that looks like this, okay? So when I tell you what you should be doing, it doesn't always mean that I can do it myself. Most of the time I do, but sometimes I screw up too. So anyway, this is a lesson for new users more so than those of you guys that are experienced. Don't put your stop at the best place to go short. It's just a bad place to do it. Do you ever play the lotto, Mirror Boy? Just curious. Do you ever play lotto tickets like Quick Picks? Do you play the Mega Millions and the Super Powerball, or do you play the Pick 3 balls? That's the answer to your question. Only when it's over 550 million? Right. Same thing with the NASDAQ. The S&P is slow, and you can make 10 times the money on the NASDAQ that you can make on the S&P because, look, there's nothing wrong with either market. You could trade bonds and put a trade on and wait for 9 hours for your target. That's okay too, right? So what gives me the most movement and the most opportunity in a day to make money? That's the market I'm looking at. So if the NASDAQ, again, let's look at the NASDAQ. Today, if you were, right? So support holds, triggers roll. Ultimately, we said it's going to make it from fib support up to resistance. I can guarantee you if we look at the S&P, there's not as much money dollar for dollar for the same amount of time that there was in the last 15 minutes on the NASDAQ. Now, once we reach, so look, let's see what we did. So we hit a fib again with divergence. So now we have a termination top that says, hey, we're probably going to at least stop buying the market. Yeah. I think that's a fair assessment. We were, trying to buy the market on the way up, and the market was going up, and it's all good, and we got that. Hopefully you guys got that. Now we're in a situation where we have a good top and a second divergence, and we have to say to ourselves, anticipation of going lower. So there's two spots. We got this first one, and then the anticipation is to go maybe to the second one because of the condition. Now it's happening very quickly because it's the NASDAQ and it's early and it's volatile. But do you guys see, this is the same thing we were talking about earlier, is that we have, and again, it's fast, but you see what I'm talking about. This is a perfect example of exactly what we just went through. Condition, triggers get really strong, and we get a second lower divergence. The anticipation is we're going further than we thought we were going to go. So you quit looking at, what the little things trouble-wise that are in your way, and you start focusing in on the farther away areas, if that makes sense. Does that make sense? A good top and a good condition almost always goes further. And that's the exact same thing we saw first thing this morning when we were talking about this one. Now, the further away was only right here, nothing else, but it's the same thing. Fibs and divergence, second divergence, we had, like a 15-point momentum short, which was short-lived because we're in a freaking super strong uptrend, but that's okay. And then we had long until we get the same thing in reverse, which is divergence, lower divergence, probably going to make it to the farther away fib, which it looks like we did. And then now we have to evaluate strength of our trigger lines and location of our trigger lines and say, is it going to keep going or not yet? Now, that might have been too fast. Was there news? There's news at 10 o'clock still, so we got to watch for news in a couple of minutes, but that might be pre-news news. But the patterns are the same. Once you get the pattern and you get comfortable with, because this and this happened, we're going to not stop at that first line. We're going to go to the farther away line. Now, when I give you guys these videos, bear with me. You guys remember this video list that I gave you right here? Let's go through it real quick and let's talk about them, okay? So the first video is this one, and you guys have hopefully all watched this video at this point. Right, this is the tops and bottoms video. And it's not trading the tops and bottoms per se. It's you're trading after the edge holds. Is that a better way of saying it? It's not trading at the edge, which you can do, but we don't really teach a lot of counter trend trading. I actually did one yesterday. I had to, but every once in a while you'll have an edge that's so tempting that you'll take a counter trend trade. Right? And it's okay. You can do it. Just make sure that the market flow agrees with what you're doing, and you usually get away with it. Anyway, so look, that video goes through and spends an enormous amount of time with what we were just talking about this morning, which is, building a conversation and an understanding about the quality of the top or the bottom. And when we go back to crude oil and we look at Paul's trades, it's the same thing. Right? We're building a conversation about what the charts are telling us. So we have an area up top. Very, 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 very common that when the triggers are strong at the first top, they're going to retest. Then they make the second divergence. And from this point forward, basically after the second bar down, right? So from this point forward right here, it should be shorts and nothing but shorts and shorts and shorts and shorts. And then we have, again, we have a little bit of an overrun, but we have divergence at the bottom. And anytime you have divergence at the bottom and the triggers roll, you can pretty much say to yourself, we're going to make it to the midband and fibs. Watch. I want to do something for you real quick. You may actually giggle a little bit at this, okay? Where the heck am I looking for? Check this out. I can't possibly, I say I can't make this up. I lied. I did make this up. So this is my doing, but I want you to see something. In 2004, we wait for price to get to a fib. We wait for divergence. We wait for the triggers to roll. And then we anticipate that the market, because of fibs and divergence and triggers rolling, is going to make it to mid-bands or one-to-ones. Look, I'm going to give you guys a picture of this. Put it, whenever you're thinking about your first trade going the other way, this trade still works freaking awesome. I want somebody to do this, okay? Go find 100 of these trades where you have divergence, fib resistance, the triggers roll, and tell me if you make the midband. Now, usually, depending on how strong it was the first time, the midband and fibs will go back up. So watch. Now let's look at today and right now, and let's just laugh. Now, we overran the fibs a little bit, which will happen from time to time, but we have fibs with divergence, with the trigger lines rolling, buy a pullback to the small triggers and fibs, with mid-bands, fibs, and one-to-ones as a target. Is that the exact same thing? 100%, almost verbatim. Granted, the fib at the bottom could have been a little sharper, but isn't that the same trade? In reverse? Now, you have to have an anticipation. Watch, I'll tell you what's going to happen before it happens. Because this was strong down the first time, this area is probably going to go back down again. Now, that doesn't mean it's a short. It just means that if you're long, you need to take your money and get the hell out. And keep going. I don't know what it's going to do. I don't know what it's going to do. But I know that the patterns that we teach work and they're repeatable. And if you did go long at 17 and you got out at 40, you just made a ton of money. Now, if it keeps going through 52 or 53, then we'll change our mind. We'll say condition says we'll keep going up. So we'll see what happens. Who went long? Anybody? So look, we got to the area, which would have been a 50-50 happens with strong triggers, not weak triggers. So that's a real good question, P, but you can't have a 50-50 trade with weak triggers. Let me go further and say what that is again, okay? So look, there's no such thing as a 50-50 when the triggers are together. You know, the smalls are inside of the large. 50-50 is when the small triggers are taken off and the large triggers are like, wait a minute. Does that make sense? So there's no such thing as 50-50 when... Where did that picture go? Bear with me. That was a great question. And so look, here's the picture. You can't have a 50-50 with weak triggers because they're all technically below the fib. They're just inside of each other, which means that we may go back up. So sometimes they overrun a fib by just a little bit and then they go back the other way. Does that make sense? And again, it'll probably go back down, but it doesn't have to. We have to obviously read the market and say what happened. Well, we got to the spot, but they said, screw that. We're going to keep on going. So anyway, was there a trade in here? It looks like one of those ones that just ran. But once we break through fibs, you just tried a long on the NQ, which means you just lost. So, all right, we'll go look. All right, so you saw the bottom. Hopefully this was your long trade right here. Was that your long trade? Or did you try to do it over here? All right. Now, okay, guys, so we've done all this work today, okay? I want you to think about what I'm about to tell you for a second. When we talk about good top or good bottom, okay, and this is so freaking important. And the video goes through this, you know, over and over and over and over and over and over again. But I think the live market is such a better teacher. Great top. Yes. Everybody agree? Fibs, divergence, lower divergence. You guys know it now like the back of your hand after today. Tell me about the condition of the bottom. I mean, just explain it to me slowly so I understand it. How many great things guaranteed the bottom is good? What'd you have? I mean, we had some things, but the triggers kind of got past the fib. There's no divergence. So, you know, we got an opportunity for a long trade, but this is kind of where, you know, the great top and then not great bottom ends up kind of resuming the trend to the downside. So you get a short-term bounce, but you don't have enough conditions that solidify the bottom to hang on for dear life forever. You can't really say, hey, that was such a great bottom that I'm going to hang on to my trade forever. So this is where if you take the long trade, which is fine, you have to pay more attention to your smaller chart management as you go up. Does that make sense? So when you're at a great top, like I was telling P on his crude oil shorts earlier, you basically put your middle fingers up to them and say, I dare you to come get my money. I bet you can't. And they usually don't when you have a great top. When you don't have a great bottom, you can go long, but then the small chart management starts to play out. So look, I'm going to give you guys that picture so you can keep it. So let's see. Look, I said it. Let's see if we can figure out what happened. Okay, so again, we had discussed the opportunity to go long, which I think was in this area. And then we got almost to a fib right there, not quite. And then that was it. And then look, we have to ask ourselves, you know, the first time up, we had enough conditions to go long in here. Everybody agree with that? I mean, realistically, all the triggers are up and large triggers are up. Everything in here said we're going up. I think we're okay with that, right? Now, as we got back to here the second time, look at the condition of the trigger lines. So there's no reason to go long again. So it was a one and done, and then that was it. So this one was a good opportunity, and you didn't quite make it, but there was still room for, making some money. And then the second time, the conditions just said, we're done. We're not going up anymore. And then you say to yourself, okay, now you back up and say, you know what? It was a great top. It's a bad bottom. If it breaks back through, it's probably going to continue down. Does that make sense? Whichever one the triggers and divergence agree with, Rakesh, is the answer to your question. Look, download this list of videos, especially if you're new, obviously. You have to build this experience of what's a better top and what's not a better top. Every one of these videos that's on that little list right there, homework. You watch those 4 or 5 videos, you're going to be like, dang, all right, I'm good. I pretty much know what I'm doing now. It's literally going to change everything. So do you guys understand this kind of, I'm leaning hard on the downside, I'm cautiously going long, and then I might have to go back the other way. So how it plays out on the chart is like this. We get the one long, which is totally cool. And then things give out, and, the good top ends up, kind of taking us back down again. And look, you end up with one trend trade if you did it. So after the bad bottom broke, we end up with a trend trade short. And then now we have to kind of assess where everything's at. But all right, Jose, you did the short. I think it was perfect. Got in maybe a little low, but that's okay. You had a good spot, good stop, and you made your money. Awesome, Jose. Yeah, look, momentum trades have to be very, very tight. Whatever the small triggers and indicator together is what the momentum trade is. So it doesn't. You don't know which fib until the small triggers being attached to whatever it is. If you're going to do a momentum trade, the small triggers have to be attached to whatever the indicator is. It could be a mid band, it could be a 1-to-1, it could be a fib. Any of those three. You don't care which one it is. You just need a great top, super strong small triggers attached to the price. Does that make sense? And again, look, we did this yesterday. When we first started seeing this momentum look in, 2004, whatever it was, we only did it after a top or a trend trade, and we only did it with 1-to-1s. But the idea is, this is 19 years old, so excuse the picture. But typically, momentum continuation after an exit of a prior trade or a good top, it's always been the area plus the small triggers. I know that's a little large, but do you understand what I'm saying? When these two are attached, you don't have to guess as to what the area is. So if it's a fib, great. If it's a mid-band, great. If it's a 1-to-1, great. Quality of the top is the most important rule before you do a momentum trade. Perfect. Let's do this. I think that was a really great statement. I want to write it down somewhere. Momentum trades. Bear with me here. I'm going to check myself. Because, look, talking to you guys has really been great because I can hear what you're thinking. And when you guys talk back to me, it's so much better. Because I could spew stuff all day long. I just want to see something. Okay. You know what? Crazy me. Actually, I think I have this from yesterday. So look, crazy me. I actually wrote it in the rules. The identified area will serve as your entry area. Wait. Pinpointing the entry area involves looking for specific indicators such as fibs, mid-bands, or 1-to-1s that are positioned inside of the small triggers on the small chart. I did say it. I was like, man, that sounds good. I should make a rule of that. Holy cow, I did it already. I forgot what I wrote in there. All right, so just follow the rules. You'll be okay. And again, look, rule number 1, most important thing on God's green earth, period, end of discussion. You better have a damn good top. And I think personally, if you don't use the market flow chart, you better start if you're going to be doing momentum trades. Because almost every good momentum trade has the market flow agreeing with it and strong triggers on the range chart too. If you're going to start doing momentum trades, you better start using the market flow chart. You guys hear me on that? Now, the other thing about a momentum trade, think about the rules. A good top on all charts. I made a picture yesterday. Let me dig it up here real quick. All right. Ooh, we're starting to make a bottom. Check it out. Before we're done making our actual bottom, you see how they're starting to hint over here? They're like, hey, we're going to start hinting that we're going to go down again. Remember what I said about divergence and small triggers rolling up? Usually it's going to make the mid-band. And so what's probably going to happen is we're going to go up, and then we're probably going to come back down, and then we're going to end up making some big decisions, if they even get that high. Might not even get that high, but... So look, we don't have a good bottom yet. Oops, sorry. So just because you had a little divergence from almost to a fib, that's not a good bottom. Well, first of all, don't use the word we. Use the word I or me. So look, you have to have condition on the big chart, and then you find the entry on the smaller chart. And we don't get confused. And we don't get lost. Most people, after they've had software for a month or two, don't have any confusion at all. All right, so again, look, I'm telling you what's going to happen before it happens. We're going to go up to the mid-band, and then we're going to come back down, and then we're going to see what happens. How do I know that? It's because it's what it does most of the time. Now, it doesn't have to do that, but it usually does. And then, look, once we come down here the second time, then we'll figure out if they're going to make a good bottom or not. So it's never usually the first time that makes a good bottom. It's usually the second time or the third time. Anyway. So at the moment, you guys should be flat NASDAQ and waiting for something to do. Yes? Cool. Now, I would guess without question we're going to 825 down here. We'll see. Do you see why we don't have a good bottom over here? We didn't make it to the last fibs. We didn't make it to the prior low. The large triggers didn't really roll up strong. So it's not that it can't go up. It can. It's just not a good look for us to think about taking long trades with. So if you were looking at your little chart, look, you don't even have to look at your little chart ever until your large chart has the right condition. How's that, Rakesh? That'll help you out. Don't even look at your little chart until your big chart has a good enough condition that you say, hey, now it's time to look at my little chart. I need to find a trade. Then you quit staring at your little chart, hoping for something to happen and trying to find something instead of waiting for the right condition. What do you guys think about my magic yellow boxes? Pretty cool, right? Probably still go a little further because the triggers are strong, but I could just sit here all day and draw yellow boxes on the chart for you guys, and you guys can do what you do. Anyway, look, if we don't make a good bottom here, which, again, look, if we do, we're probably going to go up to here. That would be the next guess. Do you guys see what I just did? If we make a bottom here, which I don't know if we will yet, the triggers aren't going to cross up for a minute. But if we do, I'm already anticipating we're going to go higher. The first time I anticipated mid-bands, maybe to the fibs. If this holds, I have to anticipate we're going all the way up to there. Do you see the difference? The change in thought process in your head? Because then you're not going to be pooping on yourself going long into that or going long into that. You're going to say, hey, it's a good bottom. We're going all the way up to here. Let me get all that money. Changes your total perspective on what's about to happen. Now, I'm not saying it will. All right. P, let me look at your trade. If you guys have trades, put them in because I'd love to see them. All right. I think this one's very fair. ES, lower divergence, which I love. Now, here's the fun part. After that lower divergence, you probably should have went short right here. Paul. Why not short right there? Terms, Terms. Got no damn terms. You already said lower divergence, it's going to go farther down. So look, all right, half of the lesson has been digested, I see. So you got the first half of it right. All right. Hey, this is totally cool stuff, guys, because look, if you guys post in a picture and tell me why I think you shoulda is what I'm going to call this picture. Now, do you see what you said on why you weren't going to do it? You said termination conditions. But because of this first, right, I was telling you about going short right here. So let's look at it. We'll kind of break it down. I know it's getting a little fuzzy because it's bigger, but because of that second divergence, worst case, you were thinking about getting to this price. Yes, 24. Is that a fair assessment? Worst case, 24 after the second divergence. So if you look at these small triggers, this right here is not a termination condition. That's not a termination area. It almost has zero chance of holding because of what happened up here. So you have to think farther away line. Does that make sense? You have to think farther away line. And again, when you look at trend trade short, this is fibs, mid bands, and large triggers. That was your short right there at 79. And you would have been up 8 points before thinking about doing a second trade. Cool, right? Now, you could have taken half off when you got to the 24, but I think from 29 to 24s, or was that the S&P? 5 points on the S&P is more than enough money. But again, you have to build this trust. Now you go a little further, and again, maybe there's some market flow help in there too. Maybe not. Market flow did hold, and then that's what caused the second divergence. All right. This is super, super, super good, guys. Do you see why he didn't do it? He didn't do it because of this one little line right here, and he didn't want to go short right there. That is why he didn't do it, which is cool. That's a valid reason until you back out and you say, well, we're going to go to the farther line. Just that one simple thought changes everything. All right, so now we have to ask ourselves a question. With the triggers that strong, did we make a good bottom? No, not even freaking close. All right, so let's go back in time. Starting at the top. Let me clean up my mess. Divergence from fibs, lower divergence, good top. Then we had a little bounce around the fib area, but it wasn't a good bottom, so it was short-lived. And then we broke fibs, and you guys had a trend trade short right here. Jose, you took that one. And then we didn't have really a good bottom. We put in a little bounce, but the mid-band did what it was supposed to do. And we still don't have a good bottom. And lo and behold, we're still going down after a good top. All right, let's see what you guys got. Put them in. I want to see them, guys. Whew, man, look at that. Look at that, baby. Isn't that beautiful? I love it. Everything was going down after a good top. You got in pretty much as spectacular as it could have been, and you just took your money. That's okay. I mean, if you just take 20 ticks on crude oil and do it a couple times a day. Now, I'm going to go back in time, and I'm going to do this crazy thing that we do sometimes, which is called Pull up the damn rules and read them. If you're going to do a really good trend trade, is the market coming from a good top or bottom? You have to answer this question. And if the answer is no, it's not coming from a good top or bottom, you can still do the trade. Just don't think home run, think base hit. Fair enough? If it is coming from a good top or bottom, think farther away lines. If it is a good top or bottom, force them to stop you out of your position. All right, Jose, talk to me, baby. Let's see what you got. All right. He's kind of sneaking in a little momentum trade there. All right, let's see what you got. So you had a pretty good top at the mid band, and you were expecting to get to the lower lines. And you said the only way I could possibly do it is with one little momentum trade. I mean, how much were you risking? 2 points? 3 points, barely? So you were barely risking, not even a cup of coffee. That's perfect. Now, maybe that last stop, Again, you got to multiple fibs with a pivot stop out. I think you have to take a full exit there and wait for it to break or roll over. This is a situation where I think your trade was awesome. I think your last management runner was not. And the reason why, because everything is right now, right now, right now. It's not, what is happening now? Should I take my profit or hold on, right? That's the question you have to ask yourself when you're looking at your chart. What's happening right now? Why is that not getting bigger? Come on, John. Where's my words? Oh, man, I deleted them. Anyway. And I want you, look, I like blowing stuff up because I think it's dramatic and I think it really helps. But again, without looking at the small chart, Jose, how many triggers are below that last fib at that moment in time? No, the last fib is right here. That's the last fib. And that's the trigger. TTFM, baby. Right there. Take your money. Because you don't know what's going to happen next. You have to wait. So you did it perfect. You got out of 2 of them. It's this last one that's suspect right there. You gave away all your money plus when the fibs and the triggers told you take it. That's the only difference. And I know it happens quick and it's okay. It's a learning event. Does everybody else understand that? If you say no if you don't understand it. If you're short and you reach fibs, let me go to the user guide because it never hurts to go to the user guide. Here, let me close some of this junk I got here. I love a strong trend up and then a strong trend down day. All right. So in the user guide, just throw it out there. We're talking about termination conditions, an indicator-based reading, and it may reverse the market. So whenever we reach the last blue fib support, we have to read the triggers versus the location. Now, specifically, we even have a picture in here that does a pretty good job of this. This is the same thing. When you reach this last fib, if you were short, you have to say to yourself, where is the location of my triggers and can I expect that fib to break or should I take my money? Look, you guys pay a lot of money for our software. I appreciate it. So you have to learn to read it and trust it to its fullest extent to really start ripping the cover off the ball. To be able to be patient enough to wait for those good, big, when you stop taking $100 on your first trade and you start taking 200, that's when things get better. And then when you let the market tell you where the last target's going to be instead of taking it, you kind of work through this evolution of, I'll take a little bit because it feels good. Like my first profit target on the NASDAQ for the most part is 10 points, which is $200. So if I'm not going to get at least $200, I try not to do the trade. I mean, I'll take 8 or 9 if something's in the way, but if you know where it's going to go, make all that money. All right. So look, right now, guys, short term, we had divergence in the middle of freaking nowhere. Everybody agree with that? So because we had divergence and triggers are going up, we're going higher. But invariably, whenever we have divergence and triggers rolling up, usually the one-to-ones and mid-band become the first spot where we have to say, if it gives out, we'll end up finishing the move down to here. You guys see what I'm saying? And again, because we had divergence and the triggers rolled, we'll see how they're going to handle this. Sometimes they go higher and get to the fib and then come back down. So we have two choices. This window right here to finish the move off. Or, maybe it comes down halfway and gets to here and then makes a higher divergence. I don't know what's going to happen. But if it comes down like this and makes a higher divergence, we'll trade up to this fib. Long. We'll see. So right now, can we just quantify, label the bottom? Is that a good bottom or just a bottom? I think it's just a bottom. I don't think it's great. Does it mean it can't be the low of the day? I don't know. Maybe there's what do they call it? A VWAP? I don't even know what the hell that is, but people watch whatever the hell that thing is. It doesn't matter, guys. I don't watch anything else other than what we watch because you don't need anything else. I can read the market like a Dr. Seuss book, and you will too, I promise. It just takes time and getting used to it. All right, let's use our small chart here and see what we got. Again, we're going up. We all agree, right? What else happened on our small chart? Anchored VWAP, whatever. Is that the one you use on your boat? All right, what happened? We had a condition, right? What's the condition? It's a condition. So we already knew it was going up because of the condition. Now, if there was the fib down here, it'd be freaking awesome, right? Look, if you were to say, hey, I had 2 or 3 fibs right here, I'm hypothetically drawing in yellow fibs. Everybody okay with that? If this was fib, and your market flow chart agreed, then you would be going long with a momentum trade maybe right here. If it's not, it wasn't, so I can't say that, but that's the look if you're going to do a momentum trade on the NASDAQ. Very little risk and strong small triggers through the spot. Rain, do you see that? And you can't get, the NASDAQ is awesome for momentum trades. You either win them instantly or they're over really, really, really quick. You don't have to really wait around to figure out what's going to happen. Anyway, all right, back to our big chart because we already said it. Divergence and triggers roll up. We're going to probably hit the mid-band and one-to-ones, which we did. right? So the first objective has been reached. We'll see if they have a little more in them. We can look at our small chart to give us an answer. What's the answer on the small chart? Is it going to stop? Is there anything that really says to you, hey, we're going to stop? Up? Yeah, so we'll probably make the fibs. We'll see. Now, because we did get to the 1-to-1 in the midband area, this is where, you know, if we have a pattern on our small chart that tells us it might be over, we'd watch it. There's no pattern that says we're slowing down, so we'll probably end up making it. This is where, because, you know, again, look, this is where, for me personally, I love these as profit targets. If you were long, the little 1-to-1s, at least a first profit target for me. If you, let's say hypothetically you were long, whatever, maybe a market flow, high volume line. I don't know. We'd have to look at the market flow and see what happened in there, but maybe not. Let me clean up my mess. There's only one spot where the market flow helped out going long. It was right there. Check it out. If you wanted to go long because everything was going up and you needed one little additional kick in the ass to say, yeah, it's okay, go ahead and do it. That high volume line is very, very helpful. I promise you somebody did it. Do you guys remember the other little trick I told you yesterday? Let's see who was paying attention. I gave you guys a picture. I'm going to give it to you again. Let me go find the damn thing. Ooh, we're getting close. Getting close, but not done yet. All right, let's see what. Bear with me. I gave you guys quite a few pictures yesterday. Oh, this is one of the trades I posted in yesterday. Look, I'm going to give you that one because it's so freaking beautiful. But that's not the one I meant, so hang on. Ooh, you know what? While we're at it, here's another momentum trade. I did this one, so I can post it. Yes, it did win. But that's still not the picture I wanted to give you. By the way, we hit the fib, and I don't even have to look at my big chart to tell me that, you know, again, this is where the market flow starts to go, hey, man, that might be it. Temporarily. Not saying it can't break, it can, but I'm still not finding the picture I want yet. Hang on. I found some good ones, but that was yesterday, right? Does it feel like every day is the same? Same thing every day, over and over and over. Aha! Here's my picture. Okay. There we go. That's the one I was looking for. So you remember we were saying to ourselves, you know, using the market. Look, if you don't use the market flow as you get better at reading your charts and your triggers, I don't know how on God's green earth you'll live without it. So you might as well start sooner than later. But it's not really about the dots. It's about high volume lines or the triggers on that chart. I mean, that's basically it. But this was a little trick that we went through yesterday where we said if you have, assuming that your large chart was right and your smaller chart is right, if you're looking for an entry, the white paint bar down into nuclear strong up small triggers will give you an entry. So, you know, sometimes you just miss a trend trade area by a little bit. So anyway, you guys now have this picture again from yesterday. But look at it. That's what this was. So look at them head to head here. So you had where the circle is, you had a white paint bar down into a trend trade long entry. And then if you didn't do that one, which is okay, then you had a high volume line. So you had a white bar into trend trade long here. And here you had a HVA line help at that spot. And if you guys saw, Mike posted in another trade earlier this morning on gold where he had the same exact thing. So look, the large chart was up. We can all agree to that, right? So I don't even need to really look at my large chart. I just need to look at my small chart for a second. So I need to see does my market flow chart agree? Does my smaller chart agree? And if they do, you end up getting a long trade up to resistance that makes you a ton of money. Now, you're going to go back and look at it like this, and you're going to say, okay, does it make more sense if you look at it this way? You had divergence, and you're expecting to get to, at least the mid-band and fib. And then ultimately, there's still no reason for it to stop. All right, bear with me. I'm going to take a picture for you. And again, look, we had divergence on the bottom on the NASDAQ, which is still good. It's not the best bottom, but it was good enough to anticipate that we were going up. So look, divergence, strong triggers up. That's always a good precursor. And then basically you had, even if you waited for a signal, you had at least a couple opportunities where you could have taken advantage of the obviousness of the trend up here. 828. I got to figure out what that means. You're talking about the next fib on the chart? Yeah, probably. If you break a fib, you usually go to the next one. That's pretty much the way it works. Right? Jose, nice call. All right. Now, look, eventually something's going to make a top or bottom or another breakout. We don't have to guess. We just have to read. I was hoping they make a good top because, look, any good top or good bottom, I think, has to include all three charts. If you can have three charts that all agree to the same thing at the same time, I'll show you winning trades most of the time. If you lose a trade in that situation, it's okay. All right. Questions, comments, concerns. I'm going to take a 2-minute break here, guys, real quick. I'm going to put a line in here. I want you guys to post in any trades that you have or any questions that you have, and let's go through them together. Post any picks or questions. Look, I don't care what, if you're new and you're like, I have no freaking clue what an entry is. Or what the hell's a bar? It doesn't matter what you ask. The only bad question is one that goes unasked. So if you have a question, ask it. Even if it's where the hell do I go find the material to study what you're saying? That's a good question. So if you don't know where all the materials are, that's fine too. So I will take a short break. No. I mean, rain. Yes, you can, but you're playing with fire. The idea, before I go to the restroom here, the idea is that we want multiple factors, areas, and triggers at the same spot saying the same thing for the same reason at the same time. That's how we juice the odds in our favor. Because if you step back and you go, well, I'll just start buying and selling every trigger line when it crosses over, you're going to end up with 377 round turns for the day, and you're going to end up not making a lot of money. So the idea is that we're trying to juice the odds in our favor by having triggers and momentum and expectation and the area to get in at. Because that's the only way really that we have, can control the risk and have a smaller stop is by getting in at the areas. One of our better traders this morning, Ben, he posted in one that, again, look, I want to show you this real quick, and that's not to beat up Ben or anything like that, but we all do it sometimes, and I want you to see the wrong area versus the right area and what happens. So here, watch. Oh, that's not the right picture. I think you had a different picture. I don't know where it was. Dagnabbit. Anyway, there was one picture he had where he got in at the wrong area versus the right area, and he ended up taking a loser. And here, this is the picture. So you see what he did right here? And look, we all kind of fall victim to, fear of missing out. But he bought the market right there at resistance and ended up getting stopped out. And then, of course, he knows what he's doing. So he bought, either the blue fib or the yellow dots, and he ended up making a ton of money. So just that little bit of buying at the right spot allows you to control your risk and juices the odds in your favor. And when you're, just kind of buying because the triggers are going up or down, it's not really the right spot. This is the type of spot down here that really interests me, at the bottom. You guys can see it when I point it out to you. Watch. Just real quick, and then I got to freaking go to the bathroom, and then we'll talk about it. But look. Conditions, divergence from a fib, another divergence from the fib, no triggers getting below a fib. This is the spot right here where you make the most money possible. You're buying fibs and triggers rolling up after a condition, and then you get all that money. Now, he was probably sleeping, but anyway, once you see it and you really get that look ingrained in, you're going to be like, damn, I got it. All right, so look, we got to our fibs with weak triggers, and we had a couple divergences, which is all it takes to put the brakes on. Right? Now, is it a great top yet? No. If we break fibs, then we'll see what happens. So anyway, all right, you guys watch this. I'll be back in just a couple minutes. I could go on and do this all day. I love it. All right, I'll be right back. All right, guys, I'm back. Now, I want you guys to tell me first, what do you see? Remember what we had talked about over here? We talked about not a great bottom because it wasn't really from fibs. They went up a little bit higher. And now we're in this situation where we have to ask ourselves, did we have a good top? No, it's not a great top, but it wasn't really a great bottom either. So again, now look, we have this area right here. Is everybody okay with this? Because it wasn't a great top, you can do a trend trade short, but you may have to manage it. What was your question? Put it in if you have a question. How do you add entries and stops? Very good question. All right. So PFI first, I'm going to show you where it's at just so you know where it's at. In the software guide on this page, this is where you do your, you basically, all you do is click on your chart trader and then you can select, I made some pre-made ones for you guys. You can always change it up. All right. So did you guys get what I said? You can do a trade, but you might have to manage it. So what does that look like? Basically, look, we get our trend trade spot, which I think we just hit. And then as long as we don't get a higher divergence, then that's going to be the end of it. Usually a second higher divergence, which I know it's not plotting live, but it would be right here. So it basically has to pretty much keep going down now or else it's not going to go. And the reason why it's a little bit suspect is just because we didn't have a great top. Not that you can't go short. And if it goes all the way to where it's, where it could go, then we're talking about down to here. Everybody agree? Target wise? You meant the markings on the chart. Okay. Right click on your chart and go to data series, PFI. Right click on your chart, go to data series, Grammarly. And then down at the bottom, there's a little thing called plot executions. Change it to text and marker, and that'll show them up on your chart. And if you have do not plot, it won't plot. And then if you have markers only, it won't put all the text, but it'll still put the arrows on there for you. All right. What price did you get? 03. Well, that's looking good now. All right, guys. So look, my wife says she sold 03. And look, you can see that the triggers are getting a little bit weaker. So this is where you should have some of your money off the table at least. And then, we'll see where they go. We've got to watch the small chart now for some type of condition. So my wife said she got in right there at 03, give or take. What do you guys think? Does that look about right? And she's about to say she's going to be done for the day. She said she's flat right now. Right there. All right, baby, you're buying dinner. Now, it may keep going down to here, and that would be cool, but, that was the pretty much easy money right there. You're $40 from your goal. All right. So PFI, are you cool? Did I answer your question? Sorry, I know we're kind of doing three things at once. I think everybody should get a spouse that trades while you're working. Life's easier that way. All right. Now, why did she exit right there? Is she magical, mystical? She is magical and mystical.
Yes, I am.
But why? Because there's a condition. We all know that if you get back to a prior divergence low, they're going to bounce up, probably to the mid-band. Yeah, good luck. You know, we've been married 30 years and we have worked together and worked side by side for 30 years together. Well, I guess we've only worked out of the house together since 1997, technically. So not the first 4 or 5 years, but so if you can live and work with your spouse all day long every day, you're going to be okay. And you get her to pop off a couple of nice trades. Now you're talking. Now, don't give up. I mean, we may still make this fib. We'll see. But now we've had enough of a condition that we can say no more short trades for sure, right? Right? Because look, termination pivot stop out, even though there's not a fib here, is still enough of a termination condition for us that we're not going to do any more short trades. So, you know, we have to kind of ask ourselves, are we ready to go long? I mean, I would have loved for them to make it to 47.50, which they may yet eventually. We'll see. They may not. Who knows? I don't know what they're going to do. But now, what else did we have? Look down here at the pivot stop out on your large chart. What else did we have there? Was there some type of something on your small chart that helped us kind of fine tune that exit? Anytime you get a 1-to-1 on your chart, we love those, don't we? Especially on the NASDAQ. They're like a rock. Anyway, one of the most well-respected Fibonacci ratios is the 1-to-1. That's why you see these yellow dots work so well. All right. What do you guys think? One more long to get up to the fib again? Yay or nay? Why do we like 1-to-1s? The same reason we like Ferraris and Lamborghinis and beautiful people, because they're awesome and they work. We love 1-to-1s. All right, so what do you guys think? One more long trade, is it with the triggers and the strength, was it worth it to do one more long trade to get up to the fibs? Or at least to the prior pivot stop out. They may not stop yet, but that's a good spot to take profit. Now, can I ask you guys a question? How the hell could you get into that trade? Does anybody know the answer? You just push the button, but is there anything else that's helpful? The market flow? Was the market flow helpful? What was that picture old Novak gave you guys just a little while ago? Let's look at it again together. If everything is going your way on every single chart and you're thinking about doing an entry and you need a kick in the ass reason to do it, this pattern in a strong trending move with all three charts agreeing will keep you from missing your trend trade because you put a limit order in at the mid-band. Did we have one of these? Only if the market flow gives a high volume line. No, Rain, that's not true. What about if it gives a long signal when everything's going up? All right, let's look at it together. So here was the spot in question. So let's do two things. Let's look at the bottom. And again, I think anytime you get to a top or bottom, the market flow becomes very, very helpful. So what happened at the bottom? Well, the market flow said from 1-to-1s, we had stranded sellers with a big reversal bar followed by a white paint bar. If you guys go through our literature on the market flow, this is the look to help solidify a bottom. Yes? Damn it. That's not a circle. You can go back and study it, but go back to every fib top or bottom, every pivot stop out top or bottom, and 75 or to 80% of them are going to have this pattern. That just tells you that, hey, you're going to end up, the bottom is good. If you were still short, you'd have to be careful. Should have been out, but anyway. Now, as we're going up, again, the market flow can be handy. Does this look pretty similar to the picture I gave you guys? I mean, I think it looks damn near identical. What do you think? White paint bar down and the strong triggers up. Catch that last little bit. All right, can I ask you guys a question? If you look at this chart, is there a reason to believe we just made a good top and we should be going short? Or might it still go up? And again, I'm going to go back to the rules when we talk about, because people are like, oh, I'm going to do a high volume area trade, which is a great trade. I love that trade. It's awesome. That's not the right one. But when you get a high volume area trade, let's look at the rules. You must have a top and or a bottom with all of your charts. So you have to be able to say, look, I feel reasonably comfortable that we have made a really good top on all three of my charts, and that's why I'm going to do this trade. Does that make sense? You can't just do that trade willy-nilly out in the middle of nowhere. You can, but it's just not going to work out for you. So when you're looking at your large chart, I can't comfortably, it could make a top. It could do whatever it wants. But I can't comfortably say, hey, this is a good enough top that we need to either look for momentum shorts or high volume area shorts. It's just not that good. Now, not saying it can't work, right? Because if you look at your market flow chart, you're going to say, well, John, there was a high volume line there. And it did work. Right? And again, I think, if you were long, that would be a good spot to think about getting the hell out. If you weren't long, it's not really a good enough spot to go short because the large chart didn't agree with it yet. It worked, but that's okay. You're going to see a lot of lines that work that don't really have all of those patterns met. Now, what we may end up doing is we may end up finishing the business and getting down here. We'll see. I don't know yet. This would be considered 50-50. Do you guys see what I'm saying? 50-50? 50-50 because the large triggers are above the midband and the small triggers are below the midband. So we might go down, but it's 50-50 triggers. Now, what's the other thing that you see on your small chart that's happening that, look, even if it goes down, it's not really our money. Whenever you see a 50-50 look on the big chart, you have to be Because again, you're asking yourself, can you do a trend trade right here? Right? And, again, when you look at this, hopefully it doesn't have that really good look to you. See how spread out? When I say spread out, I mean, look, do you see these large triggers way up here? I'm trying to draw an arrow for you. These large triggers are these large triggers. They're the same trigger. So when it's that far away, usually this divergence is going to make it go back up again. And any short trades that you do will probably be short-lived until this comes together tighter. If you know what I'm saying? You have to kind of close this gap to where, well, all right. So look, case in point. This divergence made us go higher until we got to the large triggers. Now, if we're going to go down, we might go down. I don't know. It's still not a great look for going short because we have a green background. So I think we're in a situation where we have to kind of sit and wait for a better top. And then, and it's not that it can't go down. That's not what I'm saying. I'm just saying that it's not super high probability. Ziva, yeah. And you have a high winning percentage too, right? All right, let's see what you got here. So this is, Paul, your trade. All right. Now, you incorporated that thought process over here from what we talked about earlier, right? Which is good top. I'm putting my stop out of the way. I dare you to come take my money. Did you actually think that when you were doing it, Paul? I was just wondering if you did this time. You're like, hey, come take my money. I dare you. And look, you had the same pattern, right? It was the same pattern that we talked about earlier in the day, and we saw in crude oil, and we saw it on the NASDAQ. Divergence. This almost looks exactly the same as the crude oil trade, doesn't it? Good top, strong triggers. Paul, the next evolution of your trading, don't get out of any of your contracts until you get to there. Now how much money are you making? 3x. So look, I'm giving you the next evolution of what you're doing. Now that you can identify a good top and strong triggers and nothing in the way, hang on for a little more cash, because those are the ones that you need to make all that money. I know, but patience has nothing to do with it at this point. So again, look, this is where you start to alter your rules, because it was a great top and the triggers are so strong and nothing in the way, right? You get 2 or 3 or 4 of these a day, you're going to start making $1,000 a contract versus $400 or $500 a contract. But again, it's only under this very specific situation. Does it make sense? And again, you don't have to do anything. But now we're talking about maximizing profitability. You took the same trade and you had the same risk. The only difference is you gave up 2/3 of your profit for feeling good. Anyway, had you taken all that, that's a significant, that's what, 9 points on the S&P? $450 a contract on, what'd you do, 3 contracts? A 4 lot? Yeah, so you're talking about $1,800 for one trade instead of what you made. which I could add it up, but I know it's a lot less. Anyway, food for thought. Awesome trade, though. It's perfect. Absolutely. I'm getting to it right now. Let's take a look. Okay. All right. I don't think any of it's bad, but I don't think it's as great as it could be. So, first we're going to start at the top. Okay, and you know, look, this is a pretty good top. Right? A PSO, pivot stop out, a divergence. So that's a good top. Right? And I think, you know, your short trades are okay. I mean, obviously you're trading into a bit of a tight area. Can I show you a pattern that happens literally every day, every time, almost every single freaking time? I mean, it's so ridiculous that I put it in the user guide. Watch this. It's this little whoop-de-whoop pattern that happens almost all the time. Whenever you have the first push up, well, hang on. Let me be more specific. There's a better picture. Whenever you have this first push up that's really, 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 really strong, whenever you run into your like mid bands and support here, they have a tendency to make a bigger push and then they go. And when I look at your picture, there's nothing wrong with it, but just bear with me 2 seconds. I'm just going to save it so I can blow it up so we can really talk about it more. So look, I'm talking about this move to the upside right here. You see that? That would be, in my opinion, a strong move into the top. You okay with that? And not that it's not a top, and it is a top, but what happens is anytime you have a strong move into the top, traditionally the support or the mid bands at first are going to make the market go back up a little bit higher, which they did. And, you know, again, when you get up a little bit higher, you're kind of trading into, you know, support. You haven't really cleared out enough, you know, and I always ask people this question. When you're looking at this area, how many triggers are below it? And again, it's not that it was necessarily a bad trade. It was just a very difficult trade. Because when you look at this fib right here, there's 0 triggers below the support, which in essence makes it a termination spot that's going to end up bouncing. And, you know, again, I'm not saying that what you did was all bad, but, you know, again, to really follow the rules, you're going to sell at a red Fibonacci resistance, a magenta midband, or a 1-to-1. So at the spot where you sold, right? So you just sold right here, but the idea or the rules say sell a red line, magenta line, or yellow 1-to-1s. So which one of those did you have right there? None of them. So you got in, which again, the anticipation that it might go down was not necessarily the wrong anticipation. But you didn't really have any red lines or anything. Yeah, and look, I think it was a pretty good top. This is where, you know, right here, this is the first spot You see that? Literally right here at this spot, right there, that's the first time that you had everything going in your favor, which would be more of a momentum style trade. Yeah, and that's okay. And look, your overall thought process is not wrong that we had made a top. Obviously, this execution, see how difficult it was trying to go short into support when the triggers are above it? It's like, it's really, it's damn near impossible. So this one's just straight up wrong and you got away with it. It's okay. So going a little bit further, again, look, when we look at going short, so your entry was 77, which was at the mid-band. All right, so let's look at your large chart because this is really the answer, okay? Again, when you have the large chart, you have to ask yourself questions, right? So again, what do we have going on? We have a good top. The triggers are strong down. So we still have this kind of, we call it 50-50. So, and again, I'm just kind of looking at the mid-band here. And, this happens a lot, especially after the top. Okay, we have this kind of 50-50 look, if you will, where there's a big spread between the small and large triggers. And the idea for us is we're trying to go short, but we want to do it inside of some type of large trigger. And you chose the large trigger on your smaller chart, not the large trigger on this chart. So I think realistically, this would have been a better spot to attempt your short, just based on the large chart read. Now, when we go to your small chart, we have to ask ourselves, what happened before you got in? Okay, so look, before you got in, what happened? So let's look at it together. So we had yellow 1-to-1s. It's like a Lamborghini or a hot chick or a hot guy if you're into guys, right? No, either or. Yellow 1-to-1s work. Add to it divergence. So now we have divergence from the 1-to-1s. And what does that normally tell us? If we have divergence from a 1-to-1, what normally happens? It goes up. And when it goes up, traditionally, Paul, can you post in your rules for a 50-50 trade? So we have this big spread, and that's really what a 50-50 look looks like. It happens a lot after a strong move up. Traditionally, what you want to do is you want to wait for some type of signal to get you in. So you either want to trade closer to the edge. So let's look at your whole picture here. So if we look at the divergence in the 1-to-1 saying it's going to go higher because of divergence in 1-to-1, well, what's higher? Well, if we analyze the window of what could possibly be the spot. So again, I'm just going to highlight your large chart. Obviously, we have this over here. So when we look at your small chart and we say, look, maybe there's a line in the sand that incorporates fibs, 1-to-1s, and large triggers. So there's 4 reasons inside of this window right here. 1-to-1s, 2 red lines of fibs, and big triggers that gives you a much better odds than only a mid-band. And so, again, just looking at the odds, 2 red Fibonacci lines plus large triggers plus a 1-to-1. To me, that looks like a better spot to go in as opposed to getting out. Does that make sense? So it's two things. It's because we had 1-to-1s and divergence at the bottom, the anticipation or the read should have been we're going to go higher. And then instead of looking at, I want to go back to the picture that I had over here. Because it was divergence from something, we anticipated it's going to go further. Because we had a condition, it's going to go lower. Right? So we've been doing this all day, right? Because you had a condition, it's going to go higher. And it did. So, again, this is just chart reading stuff, but you had the right idea, maybe the wrong execution. Which is awesome. I'm glad you posted in that picture. Hopefully it's helpful. Okay, so we had divergence and our triggers rolled up. So what does that mean for us? That we're probably going higher. All right. Let's take a look. Alan, let's see what you did. Okay. So you were short and you took a couple of ticks. That's okay. Look, there's nothing wrong with what you did. Alan, you maybe didn't quite get paid fully for, again, what was in the way between you and something? What was in the way? Nothing. Yeah, your mind. Okay, good answer. So there was nothing line-wise in the way. That's when you kind of want to let things marinate for a little bit. Letting it marinate. All right, let's check in on crude oil, see what we got. Crude oil looks... Okay, so can I give you one more picture? PFI. This is an old picture that we've used a million times. And remember when I said it was kind of a 50-50 look? And this happens a lot after a strong push up. This is very, very, very similar to your chart. And again, a 50-50 look is defined when the large triggers are down. Usually you see this a lot at the mid-band after a really strong push up. Probably the time when it happens more than any other time on the planet. So this 50-50 after a strong push up, a lot of times when it fails or gives out, the market will resume the trend in that direction. It doesn't have to, but a lot of times when 50-50s fail, and even though this is an NinjaTrader 7 really old picture from when crude oil was over $100, but look at what it says on this chart. 5-1 divergence at the bottom kind of tells you that, that 50-50 look might be in trouble. Not that you can't take a trade, but you have to be mindful of it. Which we saw in your trade, right? So, and again, look, this is very typical of what happens when 50-50s end up giving out. It gives out, everything rolls back up, and then we kind of resume the trend. I mean, if I took that picture from, yesteryear, and we overlaid this on top of the live market, it's almost identical. Now, we did have a lot of fibs and junk in the way, so it was a difficult long. But the pattern is exactly the same. If you took the fibs off here, what? Get the fibs out of the way so you can focus on the triggers. There's a big spread in between, and I'm not saying short was even the wrong idea. I'm not saying it was the wrong idea. I think it was a good idea. It just didn't go. And then you get this resumption of the trend kind of thing going on. And anyway. All right. This is why I love the NASDAQ. Let me reload my template on this one real quick. 13.2, wrong one. This is why I love the NASDAQ, because when that bad boy gets going, it gets going. Did anybody get long? I'm just going to take a wild guess and say support at all the triggers going up is maybe a spot where somebody might have got long. All right, P, let's see what you got. All right. I don't know what to say. Did it lose? You know, again, they started to warn you over here that, you know, it's hard to take a graceful exit. Right? A graceful exit is one of the harder things to do, but you know, you have to ask yourself if the conditions are still as favorable for going short as you really want them to be in this spot. It was a good area, but you know, you had divergence. So I think having divergence, you have to sell at the higher area again. I mean, anytime you have divergence, just think sell the higher area, not the lower area. And I think if you were short from 1450, it might be a little bit better, 1350, whatever. But, you know, this is the moment in time where you are in big trouble. You see it? You're in big trouble because the bars are completely above the small triggers going up strong. Had you have made a good bottom, this is a momentum long trade. And you're short. And I'm not saying it's necessarily a wrong short, but the conditions have changed. And it's really, you're so emotionally and mentally invested in your trade. You know, this is where I personally would pull my stop down above the 1-to-1. So I'd be like less than 2 ticks risk. 2 points risk. And if they keep going through the triggers, great, I'll take it. But this is the spot where they're warning you that you're wrong. Anyway. Did this end up going up? I don't have S&P charts, so. This is why I love the NASDAQ. You know, the old object in motion tends to stay in motion, and nothing is truer than the NASDAQ. Generic dynamic Renko. That's the one you want to use. All right, let's look at the 55-8 chart since you're set at 0. First law of physics. There you go. All right, so look. Conditions, conditions, conditions. I want you guys to describe to me, is there a condition on this chart that you have learned today that gives you reason to believe that we might make a little bigger move to the upside? You see it, don't you? Number one, your large triggers are up. But what happened when we retested the large triggers? We got a second higher divergence. I want you guys to don't just leave the damn class and go spend the rest of your day doing nothing. I want you guys to find 100 instances of second higher divergence, especially with the triggers, and tell me what happened. Don't just listen to it in class and go, oh, that's a great lesson. Go find 100 of them. Because only when you do the stuff, look, I know it. It doesn't help you that I know it. It doesn't help you that you heard it in class. You have to not only hear it in class, and then you have to learn it, then you have to go study it, then you have to replay it, then you have to see it play out live 100 times, and then it's yours. Right now, it's just an idea. Does that make sense? It's just an idea. It's a great looking thing that old Novak is showing me on a chart, but it doesn't mean a lot until you make it yours. Go back and find it and find out what happened. How many times do we get this look with strong triggers and breakthrough fibs? How many times? It's a lot. Watch. You're going to also see, look, one of my rules in the NASDAQ, which I try not to break. Sometimes I get tempted. But in the NASDAQ, if you want to get your ass handed to you on a silver platter, go long after a second lower divergence. And they will hand your ass on a silver platter, and then they'll throw it on the ground and kick you twice. Now, not that it won't go back up, but only after the small triggers and everything rolls back up. So you can't buy here hoping it goes up, and you can't buy here hoping it goes up, and you can't buy here hoping that it goes up, which I've done all those things. It doesn't work. It doesn't work. When you see this second divergence, if you were long, which would have been okay, you have to immediately think we're going to a farther away line. Where are my farther away lines? Well, this is the first farther away line, and then this is the second farther away line. Isn't that a good little rule? Now, they may stop here and put up a fight and then go back up. We'll see what happens. I don't know what's going to happen. It's not a long right now, I can tell you that. Now, things are leaning up, right, depending on your perspective of charts. But remember, we had a good bottom on our 55-8 chart, and we have strong triggers up. So, you know, I'm not going short necessarily with this look. But we're trying to figure out if we're going to stop right here or if we're going to make it down to here. Now, what do you guys think about this? Can I play devil's advocate for a second? What do you mean? I don't. That's just the entry chart, Elvis. That's like the 5-1 chart. So look, if I was reading this chart and you put a bullet to my head and said, go, a gun to my head and said, go, I'm going to say we're going to make it to here. Now, I don't know if it's going to be from right here or right here, but that's what I'm expecting. All right, learning. Let's see what you got. Eek. All right. I don't know what to say except why did you go short? What was it that you saw? I mean, call me old fashioned, but can we agree that this is a fib right here? Lots of blue fibs. You chose to ignore them? All right. Okay, what's the name of the trade? What would you call it? Would you call it trend trade? What's the name of it? You call it momentum? All right. This is what happens when I teach momentum trades. People go off and do all the wrong stuff. So the rules for a momentum trade are you have to have a 100% definitive really good top. So where was your really good top from? From nowhere. So number one, that's not a good top. Number two, I don't know why your fibs stop the market like that, but I know for sure that one of the things that we say is that if you reach fibs and your triggers are not below them, the fibs may hold. So not only did you have fibs, but you had one-to-ones, and fibs, and no triggers below it, and you're trying to go short. But a momentum short is when the small triggers are going down like this. You see that? You're below the small triggers and you're selling a pullback. That's a momentum look. Tell me about the momentum in your small triggers when you're going short. I know this is a little dramatic to see it this big, but when you're going short, do you have momentum down in your small triggers? No, you can't go short on the wrong side of your small triggers for a momentum trade. I'm just telling you it's wrong. I don't know what else to say. It's not even close. You had a termination condition, and then you went short. Now watch. If I did it this way, let's just do it this way. I know this is... Tell me the resistance line that you sold. I see blue fib, yellow dots, pink dots, blue fib. So I see support. So what resistance did you sell? Yeah. If you say I'm going to sell the red line of Fibonacci resistance, did you? You sold it to mid-band. So where is it in this picture? Am I missing it? Yeah. You're supposed to enter at a line that's resistance. I'm not trying to pick on you here. I'm just trying to get you to see that you didn't go short at a line of resistance. You went short in between two supports. If you had sold at the mid-band, your entry would be up here. But it's not. It's down here. And even if you sold there, it wouldn't be right because you hit fibs. You got to stop. I don't know. I'm not trying to beat you up, but you're in a funk, okay? So I'm trying to solve your funk. So just bear with me. So when you get into a trade, you need to have large triggers and support if you're going long. Large triggers and support to go long. You okay with that? Trend trade wise. So you're getting in at support in between the large triggers. So if you were to sell the resistance that's inside of your large triggers, and again, I know I'm being a little melodramatic here, but so the bottom of your large triggers are right here, and the top of your large triggers are right here. So what resistance is in between your large triggers? There is no resistance in between your large triggers. Well, there is technically maybe right here. So you see how this is, you've just kind of embellished and made something up here. Going short after support sucks. After support and one-to-ones is twice as bad. And then doing it when all of your triggers are way up here and not helping you, that's even worse. Now, let's look at the market flow chart, just for fun, grins and giggles. Would you call that a support line? Blue support. How many triggers are below that support? So, and now, if you know the market flow signals, this is a buy signal, very strong buy signal, stranded sellers, antenna bar with a yellow reversal. So you had a strong buy from the edge of support with all of your triggers still going up and way up here. And you went short right here after the buy signal, basically. See how this is like all kinds of wrong? I'm not trying to beat you up, but it's just all kinds of wrong. All right, so lo and behold, we did make it down to support. See what happens. Let's look at our other charts. Let's see if we had a hint that we weren't going up. Okay, what happened before the move down to support? Divergence, lower divergence. And the triggers rolled down, and we've had basically nothing but down since. Everybody agree? All right. All right, let's see what you got. All right. We'll be watching that later. All right. Now the party begins. All right. Somebody call it out to me if you know it. Divergence from the high and the triggers roll over. We have a lower divergence. All right. Have a good one, Ziva. Now, let me ask you guys a question. Are these triggers the correct trigger line configuration for short? They're down, but they're not 100% the best they could be, are they? When the small triggers are above the large triggers, that's what makes the background green. It's not that we're not going down. We can definitely go down. It's just these are the ones where you have to be a little bit more cautious. If you have a condition on your smaller chart that causes, you know, like 2 or 3 divergences, you have to start being a little more cautious with it. So we have competing reads here at the moment. two lower divergences, which I've been harping on all day, right? And, the desire to want to do a trend trade, but I think anything above this price right here, you got to lose that thought quick. Does that make sense? Because if you get above your triggers, it's going to be over post haste. And if you get this third divergence, it's really going to be over. So it's like literally do or die right here. So there's no reason to have a 10-point stop or anything. If it doesn't go down immediately, it's not going. Now, this is where I also go to my handy dandy market flow chart and I say, what's what? So I look at my market flow chart and I say, okay, if I was short, I would have a stop above this short signal and probably no more. Right? So let's just say hypothetically you went short. Which if you did, I'm totally cool with it. But just looking at this chart, you can see what's happening, right? Our small triggers are getting inside of our large triggers, which is a warning. Our small triggers are above our large triggers on the large chart, which is a warning. And then there's nothing above this price right here, which is also another warning. You see what I'm saying? So we're having like 3 warnings on 3 different charts that we're not in the best look possible for going short. And if you were short, I'd say it's cool, but I wouldn't be risking anything more than a close above that because it's going up. Now, when we get back to the edge, this is where they're going to make some real big decisions. Would you guys agree with that? I mean, I don't know what they're going to do, but I think that the double fibs and mid band is going to be really instrumental in what's going to happen next for us. If we break above it, we may resume the uptrend. If we stay below it, we could go down, but it's a difficult look either way. So we have a very definitive line in the sand, right? 15, 8, 10. I mean, that's literally the line in the sand. The benefit is if it goes down because of our 2 divergences, that we're going to go maybe finish the move down to here. So that's a long way to go. But I think it's pretty easy to see that the triggers are not super favorable for us for taking any short trades, right? So if you're an area seller and you're short at the area, I'm okay with it. Yeah, I think we're going down. I just don't think it's as easy as it could be. Remember, divergence, lower divergence, triggers below the fibs. I think the fibs will hold. And again, this is where, some people will sell the edge. We have an edge trade, right? You can trade at the edges. That's fine. So this looks very similar to the picture that's in our, watch this. In the termination section. And again, I think short is the only thing you can think, of course. I just don't think it's not an easy trend trade. Hang on, where the hell is this? So look, this looks very much like this picture, where all the triggers are down and you got a bunch of red lines and the only thing you can really do is sell it or nothing else. Yeah. And look, if you had sold the 3 red lines of Fibonacci resistance, even though it might not have been a perfect trend trade, it's still perfectly fine. Would you agree? I I mean, when it goes up that far, it's probably not an easy 5-1 trend trade, but it's still a damn good look for going down. And I think that's what we ended up with here. And more specifically, because we had two lower divergences, I think this one had a better chance. Right? Because two down divergences usually goes a little further. Now maybe we go get the fib. Who knows? It just wasn't as easy. Which you get that sometimes. Now, for those of you guys that have the market flow chart, was there anything else on this chart that helped you out? If you were going to take a short trade from the edge, was there anything that helped you out there? I think you had a high volume line, you had 1-to-1s, you had a mid band, you had two fibs. I think, hell yeah. I mean, that's, if I was going to take an edge short, that's a good look forward, and that's a good place for a profit target. Just my take on it. Yeah, so if you're into the whole market flow, high volume lines at mid bands, fibs, and 1-to-1s with an expectation of going down, cool. But that's not a trend trade in the traditional sense. It's what we would call an edge trade. Did anybody take it? I'm just curious. Okay, that's a lot. Let's see what you got. All right, Elvis, you snuck in a short trade in there somewhere. Okay. Cool. So you waited for a down bar, Elvis, before you went short? Is what it looks like. All right, guys. Does this small chart favor going short anymore? Right here, right now? What do you think? Not as much as it once did. Now, could it go down? Sure. Did anybody go short and you're like, oh my God, I hope I stay in this trade? Just saw the pattern in the charts. Okay. All right, guys. Overall expectation. Again, I think you guys have some study work to do now, right? Go back and find these bad boys. And then tell me what happened afterwards. Still think we're going down to here before it's all over, but they're working their way down there. Sometimes they go really quick and sometimes they don't. But I would say we're probably going to head down that way eventually. They're struggling a little bit, but if you did a trade, can I repeat the rules for momentum trades? Sure. You ready? G, there you go. Rule number 1, make sure you have a really good top or bottom on all your charts. Rule number 2, don't trade into a termination. Rule number 3, have smoking strong small triggers and get in at support or resistance. Am I? Can you guys hear me? I can hear me. It's just Elvis. All right, guys, so here's what I want. Look, tomorrow is going to be Friday. Here's what I want from you guys. I want you guys to go back, number one on your chart, study good tops and good bottoms and make some pictures, bring them to class, and we're going to make sure that your understanding of a good top or bottom is intact, okay? Especially if you're newer. Number two, I want you to find these little areas where you have multiple divergences, either second higher one going up, second higher one or lower one going down, and then just tell me, can you find a trade after that that makes sense? Now it's noon, I guess, so Fed's updated. Support resistance means a fib. Well, it could mean, okay, look. Can I give you guys a one super short picture? You should put this on your wall. I'm going to give it to you. Hang on. There you go. Put this picture on your wall. This is the trading plan, guys. This is all there is to it. When multiple charts agree to a Fibonacci top, be quicker to enter either high volume area trades or momentum trades. And then when all triggers are really, really strong, do a trend trade short. And what does it say, Gary? If price reaches large triggers plus a red fib or a magenta midband or a yellow 1-to-1 dot, go short. And then same thing in reverse. If you make multiple charts that say you have a good bottom, wait for your triggers to roll, and then you can be more assertive with either high volume area trades or momentum trades. And then if everything is really, really, really strong on all your charts and all your triggers, you can buy blue fibs, green midbands, or yellow 1-to-1 dots. This is it. This is the entire trading plan, guys. The only thing you need to add to this is, do I have a good top or bottom? Because it's not that you can't do a trend trade without a good top or bottom. You just have to manage those and not expect quite as much out of them. It's the only difference. You expect one of them to be huge, and then without a good top or bottom, you expect it to make 100, 200, 250 bucks. Is that fair? That's the only difference. You can still take it. You just can't expect as much out of it. All right. My turn to go eat some lunch and then trade for a little bit, hopefully. And if you guys have something you want to go through, look, I'm just going to throw this out there before we leave. Throw it back. If you don't like it, I don't care. Tell me what you see. Divergence, a higher divergence. This is what a momentum trade would look like if you were to do a momentum trade. Is that a fair picture? Assuming you were into the whole, I'm going to do a momentum trade thing. This is exactly what you're looking for right there. Strong triggers and fibs after a reason expectation that it's going to go higher. That's really nice. But what happened before it? I want you guys this. Hopefully I changed your life today with this. What happened before you're thinking about doing what you're doing? That's the key. What happened before you're doing what you're doing? All right. I'm done, guys. I appreciate you guys being here. You guys have an awesome afternoon.